Hey everyone, I am here with Jennifer Lindsay. She is from the Mortgage Group. She's a mortgage agent there, and she's a wonderful lady that I've had the pleasure of working with a few times. And we have some questions that I've heard in the past and kind of thought that perhaps would be beneficial to go over. So here we go. Hey Lindsay, thank you for making the time to come and sit down with me. I guess I'll just kind of start right in here. What are some of the challenges that people are running into with not being able to get a better interest rate?
Yes, this is coming up quite often. A lot of people who have, purchased or renewed, and we call the pandemic rates when they were 1-2%. Those rates are long gone. They are not the normal rates that, even before COVID that we were having accessibility to. Planning your future is really the most important thing at this point in time. When you were stress test for your original mortgage, they automatically added 2% to the rate that you are actually paying to ensure that your income and debts would be manageable with this mortgage amount. Now, some of the rates have gone up slightly more than the 2%, especially if you've, lucked out and got under 2% during COVID. I've been sitting down with my clients, even if they are, a year out from renewing and just going over their budget. People's spending habits went a little bit crazy at times because they were paying lower mortgage rates. So really, it's just getting your spending under control, setting a budget, sticking to it. If you have the luxury of some time before your renewals due, you can sock away a little bit of money so that you have a bit of a cushion if, things do get tight when that new higher payment comes in. But just working with a professional, someone like a mortgage agent, to walk through the steps and show you all the different options.
Okay. How much now? We always see, 5, 10, 20% down payments. How much down payment is best to have? I know you need minimum 5%, but can you explain benefits to higher amounts or lower amounts?
Well, the down payment really is going to be person specific. Down payment is one of the biggest challenges that clients have coming up with. Ideally, you want 20%. That gives you more options to more different products. If you're self-employed or you have Bruce credit, your 20% will ensure there's a product out there that we can find for you. If you are a first-time home buyer and you access the lower down payment, it's 5% up to the first $500,000 of your purchase price. After that, you need 10%. So it's a combination of the two. That's what we call an insured mortgage. Those are our lowest rates because they are insured, so they're less risk. So the rates are lower, but it doesn't necessarily mean your payment's going to be lower. So you really just have to look at all the options available to you. When you have the insured mortgage, you're very limited as to what products you can access and what your rates are and what your other terms are.
Okay. Is it sometimes not beneficial to take the lower interest rates that are offered?
Not always. The lowest rate
you get.
The lowest rate doesn't always mean the best product. Again, you'd have to sit down and we would look at your short-term goals, your long-term goals, and see where you think you're going to be in 5 years. Typically, your lowest rates are your 5-year fixed or your insured 5-year fixed. But that doesn't always necessarily give you great terms, prepayment privileges, or 70% of Canadians break their 5-year term mortgage before year 3. So if if there's any chance of that happening in your future and you've gone with the lowest rate, sometimes that means a bigger penalty. So if you pay, a little bit higher rate, longer amortization, your payments will be lower, and sometimes we can work in better terms.
So you said that 75% of people usually break their mortgage. Like, that's crazy. Within 3 years, is it because just because of regular needs, like, oh, we have to move and they don't want to bridge finance, or like, that just seems like such a high number for such a short period of time.
Yeah, yeah. The facts are 70%. Yep, before year 3. Now it could be anything, especially during COVID when so many people lost their jobs. It could
Yeah.
be, job loss, so you can no longer afford your mortgage, or you need to figure something out until you get back into a work, death, divorce, children, needing to expand your home because you have more children, or you have relatives move in with you, or parents move in with you. Things that you really need to try. I mean, no one can predict the future, but you really need to try and look out at least 5 years before you select which mortgage and which term you're going to go with, because these things can happen. And you don't want to be stuck with, a huge penalty when you have to get out of your mortgage.
No, definitely not. So if someone has a good interest rate from like years ago, say like 2%, and they have a 10, 12, or 15 years left on their current amortization, does it make sense to, or are they able to increase the amortization with the new higher interest rate to bring down the monthly payments?
Yeah, we're seeing this a lot, especially in 2023, with prices of, everything, gas, groceries being so inflated. Rarely can you change your amortization without affecting your rate. Typically, you'd have options. You'd have to sit down with your mortgage agent and see what would work for you. Sometimes, depending on who holds your first mortgage, we can add a line of credit in second place, or sometimes that first mortgage will allow the line of credit to be introduced without changing your rate. I put a lot of second place mortgages behind the first so that you can keep your low interest rate on your first mortgage. You've got another second mortgage to consolidate some of your debts. Even if you're paying, 6-7%, once you look at consolidating your credit cards, which are, 25 to 29%, you're saving a lot of money each month.
Is there a benefit to having, say, a second mortgage in comparison to a line of credit, aside from the fact that with the line of credit, you can actually just pay the whole thing off if you wanted, that kind of thing?
It would depend on the individual, and it would depend on your situation. The line of credit, yes, you can make payments. Your minimum payments are your interest-only payments. So depending on how much money you need, line of credits are the variable rate. So it's prime plus whatever the lender offers you. Prime is a little bit high still. Prime is higher than our fixed rates right now. So a lot of people have been opting out of the variable rate or the adjustable rate with the line of credit. You can often get in a fixed term mortgage a lower interest rate, but then you're stuck to your payment and your schedule, and you may have to carry that for 5 years. So depending on how much time is left on your first mortgage, it may even be beneficial to break that first mortgage. You're going to lose that lovely low interest rate, but we can extend your amortization with a new rate, consolidate your debt. Sometimes we'll even pull a little bit of extra equity, so you can have a little bit of a cushion to pull from if you need help paying bills. And extending your amortization will lower your payment often.
I'm sure that could benefit a lot of people right now with how the inflation has just gotten so out of control, with groceries and gas, and everything is so much higher than it was. This would probably be a big benefit to be able to try and get your debt rolled into your first mortgage and start over again.
Absolutely.
So what is the benefit to using a mortgage agent broker to using other company options?
Well, it's funny you ask this because, well, I'm biased, obviously, being a mortgage agent. I was nervous. The first house that I purchased on my own after my divorce, I had the option to use a mortgage agent. I knew nothing about mortgage agents or the type of lenders that they had access to. I opted for the bank because I thought that was, the more secure thing to do. I've since learned by obviously taking this mortgage course and becoming a mortgage agent myself, that there was so much that I wanted to share with people that had similar concerns that I did in the beginning. And it's not even just the older generations who are used to just dealing with the banks. Everybody has these reservations. The mortgage agents have access, like I have access to over 50 different lenders, and each of these lenders have various products. Banks are limited to their own products. They don't often approve mortgages if you have, bruised credit, or you are self-employed, you're not claiming as much income. That's where the products of a mortgage agent come in. We also have access to the banks. So we will, if it fits for you, we will present you with the option of your various lenders and go through the negatives and positives for each. And then you can make the decision whichever you're most comfortable with.
Mm-hmm. Yeah, I mean, we've always used a mortgage broker or agent. But I have come across clients in the past where loyalty is great, but when it comes to being able to save money and, biggest investment in your life, if you can deal with a mortgage agent that has the ability to talk to 50 different lenders as opposed to just one bank that you've been with forever. Yeah, I've given options out there so that people can understand, but sometimes it's really difficult, and they feel very, very secure in sticking with that bank until they realize, hey, there is a whole new world out there.
Yeah.
And I didn't realize I could save that much money.
Well, and you know what? I make it a common practice that whoever I'm speaking to, I tell them to go to their bank first, right? Because not often, but sometimes the banks will give a better rate. And if they're okay with the other terms, like we'll go over that, obviously, like prepayment and your penalties, and the bank can do better than I can, I show them what I can offer, and then they can choose. I've never said not go to your own bank, because you have a rapport with them. Sometimes it works out, sometimes it benefits. But the other benefit of working with a mortgage agent is our availability and our customer service. I know personally myself, I take a lot of evening calls, Zooms, going to clients' houses. You don't have to come to me. I don't work 9 to 5. We schedule an appointment, and we can make it work around your schedule as well. The nice thing is we do a lot on the phone. We can do a lot over Zoom, and we can even now sign documents and contracts over the internet through programs like DocuSign. So that really frees up a lot of the client's time.
Oh, definitely. I mean, they don't have to take time off of work to see you, and there's a lot more convenience in there, which is really nice. It's the same. I mean, even with real estate, we've always worked late into the night and stuff like that, but now you can, over the computer, do everything online, and it's very easy and nice world for that. It saves up a lot of their time to do more important things sometimes. So yeah. Okay, so we're coming to the end of, I did want to ask you something in regards to your fixed and variable rates. Now, we were talking earlier, and you had said how the fixed rate is actually making some progress in moving downwards, but the variable rate is staying up there. Is there a reason why they keep it higher? Do you anticipate when they may start to lower that, or? I always like the variable myself. So.
That is the question, isn't it? Honestly, no one has a crystal ball. No one knows what's going to happen. The economists, they originally were predicting middle of 2024 that our fixed or variable rates would possibly start to decline. Now they've even changed that and pushed that to end of 2024. who knows? It could turn into 2025. Inflation is what drives your variable rate. Things like the wars going on, gas prices, groceries, housing prices, all of those things contribute to the high inflation that we're seeing right now, which is cause for concern to the Bank of Canada to hold the rates where they have been. Luckily, the last several announcements the Bank of Canada has made haven't been increases. They've been holding. We're waiting for them to start decreasing. Hopefully the end of this year, but really no one knows. Fixed rates have been slowly starting to come down. They will go up and down because they are affected by our bond yields. The benefit of a fixed rate is you can speak to your mortgage agent, and even if you haven't found a house yet, or your renewal is sometime, out, you're not up for renewal just yet, you can do what's called a rate hold with some of our lenders. So we can lock in, process an application and lock in a fixed rate so that if it does go up, you can still access that lower rate. Now, if they do go down, you're not bound to that rate. You can take the lesser rate. So it gives you a little bit of peace of mind if you're house shopping or you've got a renewal coming up. So I guess the key fact there is planning. You've got to plan these things in advance in order to find the best product for yourself.
So, when you are approved at a specific rate, do the financial institutions give you a certain length of time that you're allowed to hold, that they will hold that rate for you? Is it across the board the same, or it differs from institute to institute?
So not all lenders offer rate holds, but the ones that do, and there's quite a few, the typical hold is 120 days. There's a few that are 90 days. So no, they're not all the same across the board, but anywhere from 90 to 120 days is typical.
That's great. Well, I thank you so much for sitting and listening to all my questions and providing such awesome information. I know that there's a lot of people out there that have these questions and don't necessarily think, oh, I need to ask, or, they're just waiting, and this will kind of give them a good idea of what to expect and things to look forward to. And I will provide your information if anybody is interested, which it's not hard when you're very knowledgeable. So that's great. So thank you very much.
Thank you so much for having me today. I really enjoyed this. And yeah, these are questions that we're getting asked a lot. So by being able to answer this and put these calls out to people, hopefully that will answer a lot of questions, and I'm available anytime if you have more questions. So feel free to reach out anytime.
Thank you. And thank you everybody else for watching. Take care.